Hello everyone, welcome back to Current Economy and Investment Insights. Today being May 27, 2014. We have Paul Munichel with Wells Fargo with us to talk about all the activity that took place on the trading floor and in the finance arena.
Thanks, Ron, and we're coming to you on a Tuesday today because the markets were closed on Monday in observance of Memorial Day holiday. So let's start, like we usually do, by recapping the market activity from last week, ending on Friday, May 23rd. On Friday, we did see stocks rise higher heading into Memorial Day holiday. The Dow was up 63 points to 16,606. The S&P 500 gained 8 points to reach an all-time closing high of 1,900. And the NASDAQ climbed 31 points to finish at 4,185. The major averages ended the week on a positive note, following an encouraging update on the housing market. Shortly after the open, a report showed new home sales increased 6.4% in April after posting declines in the prior 2 months. Home builders moved higher in the news, with Lennar rising 4% to $40.54 and D.R. Horton advancing 4.1% to $23.57. Over on the earnings front, GameStop jumped 4.2% to $38.43 after posting results above consensus estimates. Gap Stores gained 0.7 to $41.14, even after posting a whopping 22% decline in quarterly profits. 8 of 10 sectors in the S&P 500 were up on the session. Technology was the best performing group. Hewlett-Packard rallied 6.1% to $33.72 after announcing plans to further reduce its headcount by as many as 16,000 workers. Utilities were down the most, led by Dominion Resources slipping 0.7 to $69.32. Breadth was positive on issues by 11 to 5 on the New York Stock Exchange and 11 to 4 on the NASDAQ. New York Stock Exchange composite volume totaled 2.4 billion shares. Treasuries advanced with a 10-year note up 5/32 to yield 2.53%. And with Friday's gains, the major averages finished higher last week. The Dow rose 0.7% on the week. The S&P 500 increased 1.2%, and the NASDAQ climbed 2.3%.
Okay, before I go into the CNNMoney.com report, I just want to mention to the viewers that I hope you enjoy seeing the trading floor that's going on behind us. We're doing a test, and we hope you enjoy this. Back from the beach, optimistic investors wasted little time in continuing their push for new records. Stocks climbed to an all-time high on Tuesday. That's this morning, as Wall Street cheered positive economic reports in the U.S. and a wave of buying in Europe. The Dow Jones Industrial Average, S&P 500, and NASDAQ all posted steady gains in midday trading. U.S. markets were closed on Monday in observance of Memorial Day. The Dow, as of this morning, is a plus 61.17, NASDAQ a plus 37.70, S&P 500 a plus 9.16. The S&P 500 above 1900, unheard of. Early buying carried the S&P 500 further into record territory and above the psychological important 1900 level. So far, it has hit 1911, believe it or not. This would mark the 12th record close of the year for the broad average, which ended an all-time high of 1900.5 on Friday. The Dow is within striking distance of a record closing high of 16,715.4 that was set earlier this month. The NASDAQ is up almost 1% today, continuing its May bounce back. This week could feature a lot of catch-up as traders return from the long weekend and realize they need to hop on or underneath the train before it leaves the station. According to Michael Block, chief strategist at Reno Trading Partners, and he also said the economic indicators are all showing positive. Paul, all of this that we hear from trading companies and this Michael Block, he's a strategist. He's telling us there's indicators showing positive nature. The new home sales that you just reported up 6.4%. that obviously means something very good is about to take place even further, don't you think?
I mean, the key word there is even further, because what people don't sometimes realize is how far the market has come since our lows in 2009. As you mentioned, we're creating all new highs in the S&P and in the Dow, and we've really come a long way stock market-wise since then. The economy is another issue. We're growing, but very slowly. And the housing number was great to see that 6.4% rise, but really housing has not been a part of the recovering economy so much, and definitely not part of the recovering stock market. So the market's doing better, but the economy needs work. We need to get more people back to work, and if we can get the housing market to partake, we'd really see the stock market potentially take off.
And I want to mention, even though all the things you have just said, there are still some larger corporations that are laying off. And that is just part of the keeping lean and mean, staying profitable, satisfying the stockholders. Isn't that accurate?
Right, and it's a double-edged sword. It's very unfortunate for the people that are being laid off. That adds more people to our list of unemployed in this country right now, which is not good. But for a stock investor, someone who is invested in these companies, you're right. It makes the companies more lean and mean, which should give them better profits and better earnings. And if you're an investor, it should potentially make that stock go up in value.
Okay, well, we're about to go into our second half, and Paul is going to be talking about long-term care insurance, who needs it, and let's listen to what he has to say about this. See you in a little bit. Okay, we're back with Investment Insights, and as I had mentioned, we're going to be talking about long-term care insurance, and Paul's going to talk about who really needs it. Paul, give us some of your guidance on this.
Yeah, I mean, long-term care is something that comes up, and your question is the first one, who needs it? And most people say, not me. They say they're young, they're healthy, they eat right, exercise, and get regular checkups. It's just a few of the reasons people are living longer today. And in fact, since the 1960s, life expectancy has increased between 1.5 and 2 years each decade.
Okay, that sounds like good news, that people are living longer, but what can you add to that?
Yeah, I mean, before you get too caught up in the good news, you may want to think down the road a bit. What are the odds that you'll enjoy the same level of good health when you're 80, 90, or even 100? Especially since approximately 70% of people over the age of 65 will require long-term care at some point.
All right, then what can people do to protect their estates then, Paul?
Well, with people living longer, protecting your financial assets so that you'll have enough money to last during your lifetime is every bit as important as accumulating them in the first place. But with healthcare costs rising every year, one illness or disability can wipe out a person's savings due to ongoing medical expenses. According to Genworth Financial, and they're a leading provider of long-term care insurance for individuals, the average cost for a private nursing home room in 2013 was more than $80,000 per year.
All right, I guess there's a misnomer that I'm trying to understand. I thought Medicare helped foot the bill.
Well, first of all, you need to know that Medicare generally doesn't pay for long-term care health. It pays only for skilled nursing facilities or home health care that falls under that category of medical necessities. While it may be possible to use your savings to pay for long-term health care expenses, several factors enter into the picture. For example, you'll need to determine how much money may be needed, and to figure out that dollar amount would require estimating the type and length of service that may be necessary. Additionally, income and assets that you've set aside for other retirement goals may be jeopardized if healthcare costs are higher than expected. And while you could invest for the potential expenses, investment risk may be a factor. Putting money in a conservative account may not keep up with inflationary costs of healthcare, and a more aggressive account may be affected by market downturns when money is needed.
Well, I guess that's why we're here today. Long-term care can cover that gap.
It can. A potentially more efficient and effective alternative is an insurance policy, long-term care, that would provide the dollars needed to cover long-term care health expenses. Now consider some of the advantages. Number one, you've got policy guarantees. A guarantee backed by the claims paying ability of the insurance company provides the assurance that money will be available to pay long-term care expenses when needed. Some policies have investment freedom, so you don't need to be concerned with investment performance or assets set aside to pay expenses, since an insurance policy shifts the responsibility for asset availability to the insurance company. Another advantage is you'll gain leverage. The capital required to purchase insurance protection is typically less than needed to pay for the expense due to the leverage insurance provides. As a result, you may have additional capital. A fourth benefit are tax benefits. Qualified long-term care insurance policies pay an income tax-free benefit in addition to combining long-term care benefits and death benefits. Some products even offer a return of premium feature, which ensures that if the policy is surrendered prior to claim, the original premiums paid will be returned to the policy owner.
Paul, I didn't realize that there were different options to getting long-term care.
There are.
There must be several then, huh?
The market's changed significantly, and there are different options. I mean, bottom line, you're the only one who can determine what kind of policy is right for you. So you need to work with your financial advisor to determine a plan to meet your needs and protect your financial future.
Wow, that's very interesting, and you know we covered it very quickly, but it's so important that you're really kept up to speed as to what's available out there, and make sure you have the right option covering what your intentions are and what your needs are.
Right, I mean there are, and you know, as we mentioned, there are several different options now. Years ago, it was just strictly long-term care. You paid for it, and if you needed it, you had it. If you didn't need it, those premiums were not used towards anything. Now we've got life insurance policies where you can have a death benefit plus long-term care. We mentioned the return of premium policies. There's a lot of different options out there that provide some flexibility for the investor.
And of course, all of those options vary with cost, I'm sure.
All cost and age and health, and there's lots of different factors. It's something that you do need to work with someone who has experience with to help steer you and guide you in the right direction.
All right, very good. Anything else you want to add to this, Paul? Did we pretty much cover it?
Yeah, it's just, you know, if you don't have a financial advisor, someone you're working with, we do run a lot of these quotes at our office here in Wells Fargo in Palos Heights. So if you're interested in seeing what the numbers look like, you know, viewers can feel free to contact me. It's a no cost, no obligation quote, and we're happy to get them out to anyone that's interested.
Okay, and we'll make sure that your number is at the bottom of the screen for any viewer that may have interest in talking to you. Paul, you have some compliance that you need to share?
We do. Insurance products are offered through non-bank insurance agencies of Wells Fargo and Company and are underwritten by unaffiliated insurance companies. And then the typical disclosures: insurance and securities and insurance products are not FDIC insured, not bank guaranteed, and may lose value. And Wells Fargo Advisors, LLC, member SIPC, is a registered broker-dealer and separate non-bank affiliate of Wells Fargo and Company.
Okay, very good. For Paul Munichel with Wells Fargo and myself, Ron Jankowski with Channel 4, we wish you a good investment day.